Hello everyone, thanks for tuning in, and welcome to episode 5 of my Bookkeeping Basics mini-series. I'm Emily, the home bookkeeper, and on this channel I help business owners and fellow freelance bookkeepers navigate the ever-changing QuickBooks Online, while also sharing insightful videos on all things business ownership and finance. Now, if you haven't watched the intro to this series or episodes 1, 2, 3, or 4, head over and watch them now. I have linked all the videos in the description box below. I am releasing these videos daily over the course of a week, so you can binge and take notes. But order is important, as I might overlap material from video to video. In this final video, I am covering everything you need to do and know about prepping your business's financials for tax season. Like, what does prepping for taxes look like? Why tax prep is essential for a smooth filing, and of course, how to get it all done and ready to hand off to your accountant. You can't file your taxes correctly without the right form or forms, so identifying the proper tax documents you'll need is one of the first steps that any small business owner should take. The type of forms you require will depend on the nature of the business you run. If you're a sole proprietor, attach a Schedule C form to your personal income tax return, or use a 1099 miscellaneous. If you're a corporation, use Form 1120. If you're an S Corp status, use Form 1120S. Keep in mind, your tax liability can vary widely based on what type of business entity you have. Your accountant or tax preparer will be able to explain the impact of your business type on your tax burden. Meet with a bookkeeper. If you don't have a bookkeeper yet, this is your sign to get one. Regardless of how small your business may be, hiring a bookkeeper to help you navigate your business's financials from day one is a lot easier than them coming into a mess later down the road. If you are just starting out and can't find a bookkeeper, my firm, EDJ Consulting Group, is a fully inclusive, inviting environment that works to support business owners from the very beginning. Visit edjconsultinggroup.com for more details. A bookkeeper is a valuable resource when it comes to small business tax prep. That's why meeting with a bookkeeper is on the top of my small business tax prep checklist. Many bookkeepers do not prepare tax returns, but an experienced bookkeeper knows many of the answers to your tax preparer's questions before your tax preparer even asks them. Schedule some time to review the previous year's financials with a bookkeeper. Make sure any questions they have for you have been resolved. Ensure all of your accounts are fully reconciled, and make sure to review the balance sheet. Being comfortable with where you are financially before your tax appointment will make the process go a lot smoother for both you and your tax preparer. Also, bookkeepers are a lot more affordable than accountants, so you don't want to rack up all of those billable hours on something a bookkeeper can do for half the price. Update your mileage log. Mileage is key if you are somebody who drives, travels, or bounces around from job to job. If you use your personal vehicle for business, deducting the standard mileage rate on your tax return is usually more beneficial than deducting your actual vehicle expenses for the year. The trick, of course, is you have to track your mileage in order to take the correct deduction. Fortunately, the days of keeping a paper log are behind us, and with the QuickBooks Online mobile app, you can track miles directly from your smartphone. Before scheduling your tax appointment, make sure your mileage log app has been updated and all trips have been properly classified as either business or personal. Print out the report and take it to your tax preparer, along with your vehicle mileage at the beginning and the end of the tax year. Avoid the temptation to estimate your mileage deduction. The IRS requires you to keep a log, and failure to do so can lead to your deduction being disallowed in the event you are ever audited. Gather your financial records. Bookkeepers and those pesky gossip journalists have a similar catchphrase. Show me the receipts. Documentation is everything when it comes to filing with the IRS. The IRS is not your neighbor or your friendly cashier at the local co-op. They do not take your word for anything. They require proof and documentation to legitimate your claims and deductions. Here's a list of some of the most common documents that small business owners should track down before filing: an income statement, the balance sheet, bank and credit card statements, payroll documents, last year's business tax return, partnership agreements, accounting documents, asset purchase details, and depreciation schedules. By making sure all of this information is on hand before beginning, business owners can make the tax preparation process less time-consuming. Ideally, you should be using a business accounting program like QuickBooks Online to generate most of these financial records for you. You'll also want to capture all expenses you paid for out of pocket. Do you purchase things for your business using a personal Amazon account? Have you ever used a family PayPal to subscribe to a business service? As much as possible, you should always separate your personal from your business finances. But even if you do use a personal account for business expenses, those expenses are legitimate tax deductions. That's why scanning your personal expenses for business purchases makes the Home Bookkeeper Tax Prep Checklist. How do you capture these expenses? Review your personal account activity for the previous year and isolate any business expenses you find in them. If you act before the end of the tax year, you can write yourself a reimbursement check from your business bank account and capture the expenses that way. Oftentimes, there are expenses you may not remember until after the beginning of the new year. In that case, enter the expenses into your bookkeeping by creating a journal entry, debiting the appropriate expense account, and crediting an equity account. Record all personal expenses paid for from your business accounts. Just as you may purchase things for your business using your personal accounts, you might occasionally grab your business credit card instead of your personal credit card when you are in a rush at the grocery store. These personal expenses need to be recorded properly in your bookkeeping system, so they are not improperly deducted as business expenses. Ideally, you would repay your business for these expenses, but it's much more common to simply enter the transactions as a credit to your checking or credit card account and debit to either a loan to a business or equity account. The best way to avoid this problem in the future years is by using a separate bank account and credit card just for your business expenses. Now it's time to gather any 1099s you have received. Forms known as 1099s serve as tattletale documents to help the IRS ensure taxpayers are reporting all of their income. If your business is service-based, you'll likely receive 1099s from a number of your customers or clients. If you provide any work for a company or individual as a non-employee, you'll receive a 1099 miscellaneous form. Since 2012, credit card processors and payment processing companies like PayPal and Stripe have been required to issue a new kind of 1099 form called 1099-K. Form 1099-K is used to report credit card and debit card payments in excess of $20,000. Form 1099-K is also issued when a payee receives payment for more than 200 credit or debit card transactions in a year, regardless of the annual dollar amount. Most tax preparers don't use Form 1099 miscellaneous or Form 1099-K to prepare businesses' tax returns, but they review them to ensure their clients are reporting at least as much income as the total reported on the 1099s received. That's why this tip makes our small business tax preparation checklist. Make sure you have issued 1099s as appropriate. The IRS requires you to issue Form 1099 to any non-corporate service provider to whom you pay more than $600 in a given year. The corporation rule does not apply to attorneys who must be issued a 1099 regardless of corporation status. There is an exception, though. If you pay for these services using a credit or debit card, or if you use a payment service such as PayPal or Stripe, you must exclude those payments from your 1099 reporting. The payment processor is responsible for reporting those payments on Form 1099-K. Other rules apply to 1099 reporting, so also double check with your bookkeeper to ensure you have issued all necessary 1099s. Pull receipts for asset purchases. Assets include furniture, computers, vehicles, and any other large purchases. Generally speaking, an asset will cost at least $500 and is expected to be in use for more than 1 year. Typically, businesses depreciate assets slowly, deducting the full purchase price of the asset over a number of years. However, thanks to a provision of the tax code called Section 179, you can choose to depreciate the cost of certain eligible assets all at once in the year of purchase. Your tax preparer will need to know when the asset was purchased and what was included in the purchase price. So pulling these receipts makes our small business tax preparation checklist. This will help them determine how much depreciation can be recorded in the tax year, or whether the asset qualifies for Section 179. Your tax preparer may also want to retain a copy of the receipt or other purchase documentation in their work papers. Ensure your loan balances match your balance sheet. Many small business owners record the entire amount of their loan payments as a decrease in liability owed. Not only does this cause the loan balance to be reflected inaccurately on the balance sheet, but it also doesn't separate out the interest paid. Loan payments for principal are not tax deductible, but the interest on a loan is. Review your loan statements at the end of the year with your bookkeeper, and make sure the loan balances on the balance sheet match the balances on these statements. As is the case with bank and credit card statements, many tax preparers will want to review your loan statements before preparing your tax return, so include them in the paperwork you take to your tax appointment. Remember to deduct estimated tax payments. Most small business owners make estimated income tax payments throughout the tax year. In addition, business owners must deposit payroll taxes on an ongoing basis. When you finish your tax return, deduct the income taxes you've already paid from your total income tax liability. That way, you won't be overpaying your taxes. Schedule a pre-appointment call with your tax preparer. Few things are worse than showing up to your tax appointment unprepared. Not only does this mean you have to make multiple trips to your accountant's office, but it also delays the preparation of your return. Your accountant knows what information they will need from you in order to file your return. In this video, we have highlighted the information you need for your business tax return, but additional information will be needed for your personal tax return. Many accountants create client organizers to help ensure their clients are fully prepared for their tax appointments. Asking for a client organizer or other guidance from your accountant can prevent many headaches as you prepare for your tax appointment. For more business resources, my online, self-paced home bookkeeper masterclass, business supplies, gadgets, must-haves, and more, make sure to check out edjconsultinggroup.com/resources, linked below. And of course, like this video, subscribe to my channel, and turn on those bell notifications so you'll never miss an upload. For even more content, feel free to follow me personally on Instagram at Emma Dawn and connect with me on LinkedIn. And if you need more assistance, personalized one-on-one entrepreneurship coaching, or bookkeeping and payroll management, feel free to email or visit edjconsultinggroup.com. My firm is fully inclusive and ready to help you along wherever you may be in your entrepreneurship journey.